In this video with Andrew Robinson, market analyst for Saxo Capital Markets in Singapore, he takes a look at the likely outcome of the recently called Japanese election and what it would mean for macro and monetary policy. Welcome, Andrew.
Hello again.
So the Japanese will go to the polls on December 16, and there are indications so far that the ruling Democratic Party of Japan, which has been in power for only 3 years, is trailing the opposition Liberal Democratic Party. If LDP wins power, what will this mean for Japan's economic situation?
Well, certainly the latest opinion polls we saw at the weekend are showing the LDP with 25% of the vote, the Democratic Party of Japan with 15% of the vote, and two smaller parties with 15%. So LDP does appear to be in the lead at the moment. We've got a long way to go, obviously, but it's not an aggressive lead, and it could be quite easily eroded. When it comes to policies, the LDP is very firmly or aggressively in favour of further aggressive monetary easing by the Bank of Japan, but the problem is, as we know in the past, that simply turning on the money taps doesn't necessarily guarantee that you will see a turnaround in the economy. So I think that is their stance, but whether it will work or not is another thing that we'll find out in the future.
And these are two minor parties that have emerged, led by local Japanese politicians. They tend to be quite anti-China. With the island dispute going on between China and Japan, how important is growing support for these parties in the balance of things?
Well, I think this Japan-China spat over these islands is quite serious, certainly more for the Japanese economy rather than the Chinese economy. We've already seen the impact it's had on Japanese exports to China, Chinese people naturally simply boycotting Japanese goods. So that's quite a serious impact on the actual economy as a whole. I think it's whoever does gain the vote, it's going to be quite a difficult task for them to manage or even diffuse the sentiment that is growing within Japan to actually take this confrontation just a little bit further. And I don't think that is in the interest of either of the two parties, and some compromise surely has to be found in the near future.
Japan has had 6 prime ministers in as many years, and its economy is struggling with deflation and low growth. How will a 7th then help matters?
Well, certainly there are no guarantees that a change of leadership is going to alter the economy at all. We've seen various parties trying to turn on the taps for the past 10, 15 years, and it's simply having no impact. I think it's going to be, as I said before, a difficult task. No guarantees, but maybe a different breath of fresh air might be something useful.
The Bank of Japan meets this week on Tuesday. Is the uncertainty caused by the calling of an early election likely to delay then the bank's easing plans to prevent an outright recession?
Well, certainly I think that will be a factor on tomorrow's decision. The Bank of Japan may be wanting to show that they are still independent from the politicians and that they can afford to wait one more meeting before they do any more additional easing. I think generally we can expect no change. That is the consensus amongst the latest survey on Bloomberg. It's basically looking for 100% no change in additional stimulus measures, and I think that will be the outcome that we will see tomorrow.
And is it just a matter then of waiting perhaps just one more month until the election dust has settled? So we're looking at a January meeting before we see any more easing then in Japan?
Well, it's interesting that the next meeting is actually on December the 20th, which is just after the election has been hopefully resolved. It's also a short enough period to prevent the politicians from actually being too vociferous in their policies after winning the election. So I think maybe that might be a good time for the Bank of Japan to do additional stimulus. By that time, we'll have already seen the final numbers for the 3rd quarter, which were slightly disappointing, but very much in line with forecasts. So I think generally it will be something to look out for. December the 20th, maybe it's a good time for them to do additional easing.
Japan will release trade balance figures on Thursday. What are the expectations?
Still, I would say pretty dismal, but not as bad as in September. I think that is the consensus view. We're looking at exports falling 4.9% year on year, whereas the previous month they were down 10.3%. Imports down about 3%, whereas last month they were in a minor positive. So a general deterioration in the trade balance is expected, and I can't see anything that can really turn that around, to be honest.
So expecting that, how is the market likely to trade on these numbers?
Well, I think we've got so many other factors which are affecting the yen rather than the absolute trade numbers. I think they'll have a minor impact. We're still seeing a lot of yen weakness on the back of Abe's stance on his monetary policy. Even today we heard him talking about a 2% inflation target for the Bank of Japan rather than the 1% which is there at the moment. He's also considering opening up a sovereign wealth fund to invest in overseas bonds. That's a bit more of an issue because I don't think the Bank of Japan is allowed to do that at the moment, so it'll need a constitutional change for them. So he's generally very open to easing, and that's having a negative impact on the yen. And I think these are the issues which are driving the yen at the moment rather than the trade numbers for October.
Thanks for your insights this week into the situation in Japan, Andrew.
You're welcome.